There's one clear line from Obama to Trump too now, and this has been the destruction of the World Trade Organization.
I mean, they've effectively shredded it, right? They've cut it into millions of pieces.
Exactly. And ever since then, we got the IRA program, which is against WTO law. We got sanctions, we got tariffs. We changed the rules because we were getting weaker. This is not a sign of strength. Tariffs are not a sign of strength. Sanctions are not a sign of strength.
Welcome to Year in Business. I'm thrilled to say that we're joined by Folker Hellmeyer. He's the chief economist at Germany's Netfonds and a leading commentator on all kinds of issues shaping Europe today. Folker, let me start off then with your local turf, Germany, the world's third largest exporter. It's been in a recession. How bad would you describe the economic situation at the moment?
In my eyes, it's the worst situation Germany has been in since 1949 for simple reasons. I mean, we lack on so many different fronts, like energy prices, like the supply of energy on a long-term basis. And we live in a time where energy is the utmost important asset for future growth and potential growth. And that has been the case for 300 years. But now, with artificial intelligence, with robotics and IT being the driver of the economy of the future, that is nearly detrimental for Germany, and not only for Germany, but also for big parts of Europe.
The German auto industry was the backbone of the country's economic model. Now Germany imports about 90% of advanced semiconductors, and it looks like the chips aren't coming in as reliably as they used to. So what happens with the German car industry that dominated the world until a couple of years ago?
Well, we lacked out in e-mobility. That is one big issue in the first place. But the second one is that there is no sustainable resources. There are no sustainable resources in the IT sector. I demanded that about 10 years ago that we need an own IT infrastructure in hardware as well as software. And people wouldn't listen, and we just relied and were too relaxed. That the situation of the past will be the situation of the future. The world changes, and we need, like the US now, we need efforts to be in a position where you are not too reliable on third countries.
I mean, I look at Porsche's stock and it fell sharply after warning that there are going to be these delays in its electric vehicle rollout. So that's going to be affecting 2025 into 2026. I look at the stock, down about by half over the last 2.5 years, caught between electrification and holding on to what are iconic petrol-powered cars. Has there been a German car manufacturer that impressed you with how it's been able to handle this uncertainty?
Well, if we look at the big ones in Germany, it's BMW that has done a very good job in comparison. But also I would like to point out that the future is not e-mobility. It will be a part of the future motors, no doubt about it. But we will be going back also to petrol-fueled cars. And in that respect, in particular, given the diesel, Germany still has the best cards because it's really high technologies, and the German technology in that respect is unchallenged. In that respect, I'm quite positive that we will see a certain degree of revival of the German car industry going forward into the next year, and also for brands like Volkswagen, Daimler, but in particular Volkswagen, because they are valued they are valued at levels that are irrational. If you buy Volkswagen now, you buy it for 27% of book value. So there are also chances, I would say. In that respect, I don't write off the German car industry.
So are you a buyer of VW stock today?
I was in the last week, and I stick to it.
Is there an industry that can take over from the big role that automakers played? You mentioned that you called for some high-tech developments of industry, but I'm wondering, what else kind of lead the charge? Obviously, pharma hasn't worked out as planned. Industrial engineering. I mean, you look at, quite a few efforts, and more often than not, it hasn't worked. I'm wondering where you see glimmers of hope.
I see glimmers of hope in reform policies. What we do need is, let's put it in a different way. We ordered the Southern European countries more than 10 years ago to reform. We forced them to reform. And we stood lazily aside. Thus, others were improving their business models, whereas we stick to the status of basically 2013. And we are paying the bill for that. We need to have lower taxes, less bureaucracy. The energy-related topic is the utmost important in order to stabilize the economy. And we need incentives in education. It's so much. It's basically every major field that refers to economy where we need improvement, because we were too laid back for such a long time. We were seen as the winners until 2019, and ever since then, the downturn has been historical. If you compare, for example, the GDP numbers of the last 3 years, and you look at the world economy, it has grown by roughly 10%. If you look at the global south, that's the engine of the world economy, it has grown by 13%. If you look at the industrialized nations, they have grown about 5%. If you look at the Eurozone, they've grown 2.6%. And Germany had a minus growth of 1.4% during that period of time. Now, that has never, ever happened beforehand. And that's the reason why, if you look at purchasing power parity, Germany has lost its third place, is now in the sixth place, and Russia, given purchasing power parity, is number 4 of the world. It's the biggest European economy, meanwhile, and that relates then also to foreign policies, which should have been smarter in my eyes than they were conducted over the last, in particular, 4 years.
A reminder to everybody watching, we'd love to hear from you. Drop a comment below. Also take a moment to hit that like button. It really makes a big difference. I want to talk about, if you had a chance to sit down with the Chancellor, Olaf Scholz, and let's say you had 10 minutes with him, what would you tell him to prioritize, given the urgency of the situation that you just laid out?
Is energy. We've got one big asset in the German economy still. That is the so-called hidden champions. There are 3,400 hidden champions here amongst the top 3 of their business. There are 3,400 worldwide, and Germany has 1,570 out of them. So our economic cluster is worth trillions. The efficiency is unbelievable still. It's diminishing. We're coming from 1,650. It's coming down. But all these industries, the hidden champions, have a link to energy. Thus, the topic energy, the price of energy, we pay 5 times the gas price the US pays, for example. But the same applies roughly for electricity. These prices have to come down in the first place, and there has to be a sustainable infrastructure for delivering energy for the next 10, 20 years. If you do an investment, a capital investment, the duration is 10, 20, up to 30 years. And as it is energy related, you need to be sure as investor that energy will be delivered at any time to prices that open your business to be in a position to compete with the world markets. And that is currently not the case. This is a major aspect, right? Once we get that into balance, then we can address all the other fields, lower taxes, lower bureaucracy, and it can be done simultaneously. But the energy-related aspect is the utmost important aspect. And if you look at the US, for example, what are they doing? They are just going full steam ahead to improve the supply picture of energy in order to attract artificial intelligence. All those fields of the world economy which will see the biggest growth patterns. And if Europe falls back here once again, and Germany in particular, we will lose out much more than currently is at stake. It's not only about the economy, it's about the stability of the society, it's about the stability of the political situation. And we've gone through that once in 1929, 1932, in the last century. It was the economy stupid, and we ended up with an Austrian running Germany from 1933 onwards, and this was not very good. In that respect, we should listen to that lesson.
So it sounds to me like you're saying that if the Russia-Ukraine war ends, right, and that brings about a reduction in energy prices, that maybe could unleash sort of an economic renaissance in Germany, or not necessarily? Is that not tied to that? So just because the war is resolved, energy prices are now structurally higher?
We have a problem with our energy infrastructure in the first place, and it has been the utmost stupid energy policy ever applied in the past 200 years, what we've done over the past 15 years here. And in order to restructure that will take time. What we do need is a policy that applies to our own interests. Japan is doing it. They demand from the US that they can still import Russian LNG and other fossil fuels. The US imports uranium from Russia, and we need very much the same. Once this settles, we need to reestablish our relations with Russia. In my eyes, that is one part of the solution in order to get cheap supplies of energy yet once again. And I think that is possible. And also one of our regional prime ministers has brought this into play just now in the media. And what the world knows, by the way, also is that without Russian commodities, whether it's LNG, net gas, oil, or all other commodities, the world cannot be run. Therefore, Russia plays a too major role in the supply of all these commodities worldwide.
You would have seen as well the footage emerging out from the U.S. president's tour of the Gulf. This was now a couple of months ago, and they signed deals in excess of, at least memoranda of understanding. I mean, hundreds of billions of dollars worth. Qatar, the United Arab Emirates, Saudi Arabia. And then we're talking about energy. In many ways, it seems maybe a lost opportunity for Germany in terms of securing deals as well, both in terms of inward investment and energy supply. You think they kind of missed the ball with that?
Well, I'm missing Otto von Bismarck, who was the best foreign minister ever Germany had. But that relates back to the 19th century. So he's gone by a long way. And if we look at the quality of our foreign ministers, in particular the younger, in the last 15 years, there's a lot of discussion. Put it that way, the utmost gentle way. And the point is that we do not have plans. Look, if the US does something, they have think tanks in behind where they have case studies, say if this happens and we should be doing that, this and that. And it doesn't matter whether you've got a Democratic president or a Republican president. It just works that way. It's the same in Beijing. It's the same in Moscow. And if you look at Brussels, the agenda is very, very thin on these issues. And we are paying the price for that. We need intelligence again in our top ranks, in our top elites, in our political top elites. And we are missing that dearly. And not only in Frankfurt, in Berlin, but also in Brussels, in Paris. I was never more disappointed about the quality of politics in continental Europe.
That's
than actually
yeah,
now.
That's a very
it's
a
unbelievable.
very powerful statement, and I want to kind of flesh that out. You say that they haven't brought on any think tanks or done any policy considerations. I push back on that with an article from Handelsblatt. Right, they're exclusively reporting that the foreign ministry asked for a study to understand the impact of the higher tariffs on Germany and China specifically. And what they found is that there's quite a bit of the stuff that was meant to be exported from China to the US. A lot of that stuff is now getting dumped at a lower cost into Germany. I'm wondering how worried are you about sort of the China Germany relationship, which is, as we speak, a political priority, and what that could lead to over the next couple of years?
Well, I think, again, Germany has had the weakest political stance, quality-wise, and also regarding diplomacy in the last 10 years. And we are paying price for that. And yes, certain degrees of goods which were supposed to go to the US are now going to Europe. No doubt about that. You can see that in the actual trade balance figures. But that's not the major problem. The major problem is that we are losing out on technology. But Germany used to be a hotspot of technology. We have our hidden champions. Now, we go back, the older of us may still remember June 1914, just ahead of the First World War. Germany was leading in 90% of the fields of in technology and research and development, and in the industrial appliance of it. Now, the ASPE Institute in Australia figured out there are 64 fields of technology and R&D which are important for the future. Now Europe leads in none out of 64, the US leads in 7 out of 64, and China leads in 57 out of 64. That's roughly 90%. So China is basically what was the Kaiserreich back in 1914. And you can see that they are just advancing in technology so quickly. Every sanction we apply against China plays foul against us, because they will put even more efforts into those issues where they lack us. And that's what we've seen. We've seen that with sanctions on Russia. It's happening all over the place, and we lose in the end. The Western world loses market share, and we don't have the same eagerness to compete as the global South, because they're hungry. They want development. They want success, and we are too late back. In particular in Germany, but also in Europe and in parts of the United States. And that is why all this is happening currently. This is all about geopolitical power, economic power, and as we lack out, we change the rules. And I would want to put that out, because there's one clear line from Obama to Trump 1 and Biden, and to Trump 2 now. And this has been the destruction of the World Trade Organization. Now, that is basically the skeleton of the global economy. It gives security regarding laws. 163 out of 195 nations listed in the United Nations signed it and said, right, this law of the WTO applies to us. Now, the US, there have been 6 chambers in the WTO, and the US has, under Obama, stopped filling the positions of judges.
I mean, they've effectively shredded that, right? They've cut it into millions of pieces.
Exactly. And under Trump, it was finished that none of these chambers could work any longer. And ever since then, we got the IRA program, which is against WTO law. We got sanctions, we got tariffs, all against the legal system we have set up for our world economy. And this just opened it. And and Europe is suffering exactly under this non-appliance of these legal bindings. And that's what's happening. And we are naive. And we basically supported it even under Obama, to put that clearly. We shouldn't wonder that we are just lacking, but we changed the rules because we were getting weaker. This is not a sign of strength. Tariffs are not a sign of strength. Sanctions are not a sign of strength. The IRA is not a sign of strength because it doesn't apply to WTO laws and rules. And in that respect, I can only say that any other measure we will take will have plenty more of countermeasures, which we might even see in the Global South, to emancipate the Global South from the Western framework, to have a very own development. And this is what you can see in the GDP numbers of the IMF currently. We got the economic forecast now in October, World Economic Outlook. And the Global South will have 4.2% growth this year, and the Western world 1.8 or 1.6. And they already at the basis of purchasing power parity stand at 70% of world GDP. Now go back into 1980. We were leading the world with 80% share of the world GDP. Now they stand at 70, but their growth pattern is at least double as much as we have. So thus, they approach 80%. Of course, that requires them to have more say in the global world and not listening to the West any longer to the degree
Volker,
it used
with
to
all
be.
that being said, right, because it's quite a negative assessment and negative outlook, right? So with all that said, I look at German stocks, right? The DAX, the main blue chip index, and we were up 18% in 2024. You're up about another 21% in 2025. You've outperformed European benchmarks like the MSCI Europe. No sign of hardship or frustration or pain there. Explain that for our global audience.
Well, German companies have always been international players, and the big companies worldwide are all international players. To them, it's not important what only happens in their home market, where they have the head office, but rather what is happening in the world economy. And now look at the world economy. Yes, the growth pattern this year, IMF is 3.2%, the global inflation roughly 4.5%. The nominal growth takes place in the balance sheets of the companies. So 3.2 plus 4.5 is 7.7% growth. Wow. And this is why stocks are going up. Now look at BASF, the biggest chemical company of the world. They have Ludwigshafen. Ludwigshafen used to be the biggest chemical plant structure in Europe. Now, what have they done? They are fed up with Germany, the energy prices, etc. So they set up now Ludwigshafen 2 in China. And they got 15 years gas contracts at lowest prices. Now, BASF will really have a very, very good development because they've written, that has been the balance sheet in the last years, written off so much of all those plants that have not worked out well. But now they have one of the most competitive production plants in chemical industry in the world, in China, where points of production are always also points of sale into Asia, which is the region of the world that thrives most. So that's the reason why this happens. More and more German companies are leaving Germany in order to produce somewhere else, where they get better conditions for their business, but they are still German companies. Even, by the way, but also Tesla produces in close to Berlin in Germany. We've got also American companies producing over here.
So which companies then are on your shopping list then for stocks in Germany? We talked about, we talked about Volkswagen. What else would be on that list?
Well, I'm quite positive for German car makers. I'm positive also for BASF. I'm positive for companies like SAP. That's our stronghold in software IT sector. And in general terms, I see next year a broad-based upswing. Not one where you shout out loud and in fun, but another 5 to 7% is, in my eyes, on the DAX, a very realistic view. I rather go for the 7 than the 5. Because we will see reforms here. It all takes too long, but we will see reforms. We will see that prices of energy are coming off a bit. It's not enough, but a bit. But this gives some positive perspective for companies to stay here, etc. In that respect, yes. I'm not writing Germany off, but Germany is in its deepest economic hour since 1949. There's no other take on that simply possible given the facts that are surrounding us.
What about the European Central Bank? Would you say that they've navigated the recent uncertainty well? I mean, they had a lot to deal with and sort of they had to think outside the box. I'm wondering whether you think they delivered on that. Well, I think that's an answer already, right?
They delivered on that. There's one thing I want to point out here. If you've got endogenous inflationary pressures, a central bank can move a lot by setting higher interest rates or lower interest rates, depending on the problem. when you have an exogenous event, like we had when energy price went up and we had inflation up at consumer price index up at 10% on a yearly basis, then you can't do anything about it because it's exogenous. You can raise interest rates up to the sky and it won't have an impact on that price. But when it's a one-off, like it used to be, it was about 12, 18 months, then you can look through it. And you don't have to raise interest rates because that puts an additional price tag on all goods. So I think when we talk about the ECB, about the Western central banks, apart from Japan, which refrained from though high inflation, from putting interest rates up, that was the only mistake. We should have said, all right, in 12 months, basis effect, this falls out again. It's a reversal back to the mean once we overcome the problems. And this stance was, in my eyes, wrong. It put more stress on our economies, which was unnecessary. The current state of affairs is fair. We've got a real interest rate of roughly 0. The inflation rate is around 2%. And the interest rate is around 2%. Now, the US is different, and Donald Trump has been totally right in criticizing Donald Trump. Mr. Powell at the Fed, at the helm of the Fed. Because the real interest rate used to be plus 1%. Now, the real interest rate is the interest rate, and then you deduct the inflation rate. Now, if you look at the target rate of the federal funds, it's 3.87. In the middle, 3.875. The inflation at 3, so we've got a positive interest rate of 0.875%. Europe has got 0. If you look at Japan, it's minus 2.4. Now, this is by far too high for the US economy, given its status. And in that respect, I expect another roughly 3 cuts until middle of next year.
Yeah, I mean, the market was expecting more than that. And it's been fascinating to see how quickly some of the sort of bullish cases have evaporated, including a potential move as soon as this December. I want to touch on European debt for a moment, Folker, because I look at the debt to GDP ratio in France, above 110%. The US is 125%. And the question becomes why we haven't seen more of an aggressive repricing in government bonds to accommodate for growing risks, right? Either from monetization of debt or adding new technology, sort of the blockchain. And I'm wondering whether you think that we are at an inflection point for the global economy around government bonds, or you thinking, they'll continue to kind of support the market for many more years to come?
Let's start with the US. At GDP debt GDP ratio, 125% the last few years. Under Biden, it was roughly 8%, 7% of GDP of new debt being built up every single year. That is unsustainable. Now we look at the approach of Donald Trump, and what he does is he said, all right, we take different measures. One is cutting down bureaucracy, which will diminish costs, which may not show up directly, but over time. The second point is that they say we need a higher growth pattern. Remember the first quarter when they were with the annualized growth at minus 0.5, the world was, oh, good Lord, it's going down now. It's the end of the world, the recession in the United States. And I said, look, behold, no way. And the second quarter was 3.8% GDP growth annualized. And the latest numbers I got from the Federal Reserve Atlanta for the third quarter was 3.9%. Now, that is immaculate. So basically, it's put together all what you've mentioned that early on when he traveled to Saudi Arabia and the Emirates. He brought back a business and investment volume of $2 trillion from one trip. The artificial intelligence has promised capital investment in the US around $3 trillion. The pharmaceutical industry has promised in capital investment in the US of $250 billion, also in companies like Roche and from Switzerland, Novartis. Now let's go on. Now let's take the deal with the European Union. The European Union has said, all right, we will invest $600 billion in the US in the coming years. Look at Japan, it's $550 billion. Now look at South Korea, it's $350 billion, $200 billion cash. Switzerland, $200 billion. There are more to come. We are talking roughly about an amount of $7 trillion of business or capital investment in the US in the next 3 to 5 years. Never ever before anything like this has happened in the world economy since there were signs of writing, right? So I think that is quite a success, and that will see the US thrive with their GDP. It will have higher, the government will earn more taxes through that growth. Thus, this is a plan in order to get rid of this high level of debt GDP ratio in the perspective looking into the next few years. If you look at Europe, what are we doing? Are we doing any reforms? No, nothing serious so far. France is unable to move. It's a stalemate in the politics and in the society also, and it's a bigger problem than we had in the debt crisis with Greece,
You're
Portugal,
saying the
Spain,
problem is bigger than 2013.
By far bigger. It's the biggest problem the Eurozone has seen since its inception back in the early 90s or in 1998 when it was brought to the market. So it's honestly, this is serious stuff, and I wonder why the euro dollar is still at 116, given all these facts. We don't look at facts at the moment. This has to do with something else. Maybe also political pricing. Just imagine January euro dollar was 102, now at 116. What has changed? The outlook for the US has improved dramatically. They are having a power play all the way around. Every country agrees to US demands, and we say, no, the euro, we've got to buy the euro. The country with the lowest, the region, not a country, the region with the lowest growth pattern in the Western world, etc. This doesn't work out on a long-term basis. This is not able to be a trend. This is an exceptional move that smells of a certain political influence, because just imagine euro dollar would stand now not at 102 like in January, but at 0.92. Everybody would talk about a crisis of the Eurozone. Now with the price of the euro at 116, nobody dares to do that. But in fact, we have a crisis, the biggest crisis of the Eurozone, because Germany is sick. It is a sick man of the Western world. If you look at OECD countries, we have the lowest GDP environment, and France has got structural problems without being able to solve them. Right? And this, we pay a high price. On the other hand, if you look at the former sick countries like Greece, Spain, Portugal, Ireland, they are basically now the backbone of strength within the Eurozone, with growth patterns of 2 to 4%.
Yeah, I just got back from there, and from some meetings, and it's just remarkable to see the energy and the optimism. Yeah. It's unbelievable in terms of, how far they've come from all the pain and trauma of, 12 years ago and the process that took. And now people are quite upbeat again in terms of what's possible.
And Joseph, I always say, just listen to Aristotle and to myself, of course. If you change structures, you change the path of the economy and then the cash flows. And that's happening for the past 2,350 years. And countries that apply these rules are successful. Countries that don't go belly up. I had a couple of conversations with Charles Evans, the former Fed chair of the Fed Chicago. We met twice in the 2010s, and once in Frankfurt, once in Stockholm. And I had this concept of Aristotle, and he said with his cabinet, come on, Mr. Hellmeyer, do you have some time? And we spent an hour together, and I explained to him how it works. And basically what the US is doing now is Aristotle. I'm not saying that this relates to this influence, but that's what they do. They change the patterns in order to optimize the business model, in order to thrive, in order to get income for private households, for the government. And they say, all right, we believe you. We give freedom back. Look, any regulation that you have takes freedom away from the normal civilization or from companies. And Europe is extremely stark. We have the part of state business in our GDP in Germany is 50.4%. This has nothing to do with capitalism. This is nearly communism in my eyes. It's not, but I try to provoke. But it's socialistic. It's definitely not libertarian. And if you look at America, you get freedom back. Yes, and that is good. That is democracy.
You do also get
people
all-time highs, right, in stocks initially before pulling back.
Yeah.
There is some concern that because the Fed ended its quantitative easing program or quantitative tightening program, that there have been some liquidity pressures in the system, right? And that gets people back to what happened in November of 2018. I'm wondering whether you think that drawing that parallel is fair and how serious you consider the sort of liquidity indicators there today.
I'm watching it closely, but to me, in my eyes, the problems are not comparable to what we've seen beforehand. And there's, of course, also a lesson learned by the authorities in the US. And you've got all means in order to counter it. And never, ever forget the plunge protection team. I mean, and I think they are better shaped than they were back in the Lehman crisis. And America, the United States, will not allow to falter in its geopolitical ambitions through financial markets that they control utmost. To cut a long story short.
And so on that basis, I guess you don't think stocks are overvalued in the U.S. and you're still a buyer of U.S. names in your own portfolio?
Yeah. What I recommend is, of course, the U.S. markets are not cheap. But given the outlook I've set up with the $7 billion accrued by Donald Trump, which will be applied into the economy as an extra add-on over the next few years to increase potential growth, etc., and with these new economies in artificial intelligence, robotics, etc., they have pricing power. And this is, by the way, also the difference to the Nasdaq disaster more than 20 years back. There, the valuations went up, but not the money the companies made. This time, it goes in tandem. Yes, it's high. They're going up and up and up, but it's supported by the profits the companies generate. So it's absolutely different. So I'm always happy when we get a bit of a setback, in particular in the high-tech sector, in order to buy strong companies again to reestablish positions or enlarge positions. I'm not writing the US off. I'm not writing the world economy off. We will grow by 3%. And as I said, it's not the real GDP that matters. It's the nominal GDP that matters. And the nominal GDP hovers around 7 to 8% growth per year. And that is what's happening in the balance sheets. And that is what is then transformed into discounting at the stock exchanges. So I'm pretty positive on all these.
So what
issues,
does your portfolio currently look like? So you have a little bit of German stocks going on. You have a little bit of high-tech,
high-tech, and a little bit of gold, and a little bit of
Arab Emirates, like a little bit of Dubai and Riyadh in there on the emerging market side, or not yet?
Very, very limited. Mostly is European, US stocks and gold. Not a single bond. I never ever had one.
Well, that's.
I'm nearly 65. I never ever owned bonds, just shares.
Not even corporate bonds,
or
nothing.
Cash. Not even corporate bonds. No.
Okay, that's.
I only want the real stuff, And you just change. Either you have a higher cash quota, or higher equity quota, or higher gold quota, and in these three fields.
What about property? Is that in their REITs?
Yes, of course. One, we are selling the last one. I own my own property, of course, and I had a couple of more, but I sold them. They were all located in Germany, and was quite a wise decision. And now we have one left, and that will be sold in the next 6 months.
Let's talk about gold.
I might buy one. One in Greece.
I'm based out of Dubai, so you maybe check out here. I hear Riyadh is up for sale as well. If you want to. Be even more exotic and maybe capture even more upside as the market continues to open up to foreigners, which in the past, they hadn't, you weren't able to do that. It's quite a transformation story as well. You're saying there's not enough energy and enthusiasm in terms of putting Germany into the right direction. There's a lot of energy enthusiasm in this part of the world that I've been able to witness, and trying to embrace foreign investors and make it easier and faster for them to do what they need to do to get capital deployed.
Yep, I'm with you. I'm a fan of the Global South. If looking back at the interviews we had more than 10 years ago at CNBC, I was always very strongly advocating emerging markets at the time, so the Global South. And I stick to that, basically, because that's where eagerness is. They are eager for knowledge, for technology. They want win. They want to improve their lifestyles, and we've turned a little bit lazy and fat bastards in the Western world. And we need to take up the challenge against Iran. We want to win also. We want to win the future. We want to know more. We want to be better and not just think about socialistic ideas of how to get hold of the money of people who are successful for those who are not willing to be successful, because that's the game.
I want to zoom in on gold. You said that it's an important component of your portfolio. We kind of are back down from the record highs that were hit in 2025. What's your forecast for 2026? I saw that apparently China's had quite a bit of unreported gold purchases, and that they're actually probably buying 10 times more than what the official figures suggest. Apparently, I didn't know this, that it's a lot easier to hide gold than it is crude oil. So that's why they're struggling to get the numbers right.
Yeah, and this has been ongoing for the past 20 years. I reckon that the gold hoard held by Beijing is much, much higher than we anticipate than the official numbers. This is ongoing. I've been in this business with gold since 2001 when it was $250. I had in one big German newspaper, in the Frankfurter Allgemeine Zeitung, an article said gold will hit 1,000. And everybody said, Folker, you're nuts, because it's been going down for 20 years. So no, it's going to happen because there is a demand-supply differential, which just calls for it on one hand. On the other hand, the Western system has got cancer and you need an uncorrelated asset. And it has worked out well. Now, what's going to happen next year? I won't give a limit. It will be higher. And I'm looking for the next step back, maybe towards the worst case in my eyes, currently at $3,500, $3,700. That would be the optimum to start building up bigger positions again. And the same accounts for silver. We need silver like hell for all these artificial intelligence stuff, the hardware, and for robotics, etc. So silver will, in my eyes, even outperform gold from here. And I remain positive. And the next issue is we won't have a BRICS currency. But what we might have, and which is quite likely, I reckon around 2027, maybe 2028, is something like the ECU. The ECU was a front runner of the euro. It wasn't a currency, but it was a currency basket. And I think we will see a currency basket of the Global South, of stronger countries. And there will be an underlying, like precious metals, gold, silver, platinum, and also other commodities, in order to give that a kind of serious gravity. And I think that's going to happen, but not an own currency, because therefore the economic systems, the political systems are too different to have an own currency. We see how problematic it is with the Eurozone. And in that respect, it will be a currency basket called whatever. And it will be a challenge. It will be adopted, in particular in the Global South, less so in the Western world. But we will see changes. And thus, that means, in my eyes, also that gold will be accumulated furthermore by central banks, which were a main driver in the past few years.
So how should the people be going out to buy gold then? Because it's not very practical to hoard it as bullion, physical bullion. You can rent a safe and you can, obviously move and storage costs and all that. I've always liked the idea of, a little bit of real gold, and then the other real gold would be through ETF gold. And there are actually some quite advanced ways of doing this. So that could be done through, like big custodian banks in Switzerland that have, their own in-house ETF. So it doesn't have to go through London or New York if you're really worried about, if something happens that you're not going to be able, that the ETF basically implodes, right? Because of the way it's structured.
And it's cheaper also. I mean, the spread to buy and sell is very, with the ETCs, it is much smaller. I have a certain part of my gold hold in physical gold, and the rest is being played via ETCs.
And you have a strong view on cryptocurrencies as well. I know you haven't been a fan, and and that's probably.
I've changed my mind. Well, on one hand, it's the technology. The second point is again the spat between the Western world and the global South. The global South applies these crypto. It's not a currency, crypto assets as means of payment to a certain degree, and in that respect, I think it's fair to say if you want to hold uncorrelated assets like gold, silver, or crypto assets, I would hold, let's say, if you want to hold 10 units, I would hold 8 to 9 in gold and silver and 1 to 2 in crypto assets. That's my take on how to deal with that.
Maybe a bit of a controversial idea, but maybe it's time for like some kind of sovereign wealth fund, a new one that has, that is in Germany, that is free of the government's regulatory tape, right? And, because you learn from, what the PIF has done and Mubadala and sort of the Middle Eastern ones. Trump was floating a sovereign wealth fund as well. They tried it in Egypt with very mixed success. But I'm wondering how it could work in Germany, for example.
Well, before you can set up a sovereign wealth fund, you need to have wealth in the first place.
Well, I mean,
we're losing wealth currently.
It might be contracting, but you can't tell me Germany is not a wealthy country. We both agree.
But I'm with you. Yusuf, that we need to establish these kinds of structures in order to be able to react in times of crisis. Now, Russia has done it. Norway has done it. I mean, that wealth fund is just beyond belief. Lots of countries do have it, and it's it's pure safety. Now, you could say, well, your gold hoard at the Bundesbank of 3,374 tons, or the second largest of the world. If we consider Chinese data are correct, as they are actually in the market, then that might be also something like a wealth fund. Yes, it is. But I want to have structures like Norway that gives you the ability to act in times of crisis. That's the main point. And we don't have that currently in Germany. It needs to be established. Full stop. You're right.
Folker, what inspired you to get into finance?
Actually, I was always interested in politics. And politics are impossible without economics. Only with a thriving economy, you have thriving politics. And that needs to be understood. Without companies, only companies make money in an economy, right? For the government, direct or indirectly, all income comes from corporations. The government itself doesn't earn money. It just puts money somewhere. It takes from there and gives it there and tries to do some investment, which is necessary, etc. And that was the reason. When I finished school, I just wanted to get into the know, into all these things. And I was foreign exchange trader. I started with at Deutsche Bank, and then foreign exchange trader in Hamburg, in London. And then you deal with whole economies. And it was very sportive at the time. You may recall there was 8, 9, 10 headsets, etc. And you just were going mad. Within seconds, you took decisions on millions. But after a while, I just said, I want to understand really what is going on. So I was educating myself about economics, etc., and studying also at Bank Academy and things like that. And I just loved it. It's my hobby. And that's the reason why I might go into, I could be a pensioner now, but no way. This is like, it's better than Edgar Wallace, Sidney Sheldon, John le Carré, because it has to do with power. Mr. Clinton knows also with sex and lots of money. And it's just the biggest crime story in inverted commas of the world. And it's every day a new chapter is being written.
So when you look back at your career, where would you say was the greatest struggle? Maybe there is a story you can share.
Hard to say. I think it was at Hellmeyer. Look, markets used to be in front. So before a problem started to exist, we were so good in the 70s, 80s, that the market was forecasting this to happen and discounting this risk well in advance. Chancellor Helmut Schmidt once said, we hate foreign exchange traders because they spoil our gamble or our game. And my biggest problem was in the 90s that markets were not functioning like that anymore. Markets were following policies, and thus they were not discounting the potential risk, but rather they were just following political interests. And that did cost me some money until I adopted to that policy, because I always thought markets should be smarter. So you can also say it was in the 90s a situation where the markets didn't fulfill any longer the demands of a real free market. Markets were politicized. That's it. And that was my biggest problem I had in my career. It took me 2 to 3 years where I had a real underperformance due to these facts.
In times like that, how do you stay motivated? I mean, when sort of things are rough, do you have a particular routine? Is there a certain structure that you rely on day to day? I'd love to hear.
As I said, I look at Aristotle. So if you look through the prism of Aristotle, those who change structures, change the path of their economy and improve their, mostly if it's a positive structural issue, the income over time and the cash flows. And this gives you a lot of certainty. And I just want to do a good job for this, for my companies always, then for this country, for Europe and the world in total. This sounds a little bit altruistic maybe, but it's honestly one of my main drivers doing this job, because I think we have, put it that way, as chief economists, we shouldn't be marketing agents for certain issues, but we should rather mirror risks and chances in a very professional manner that is bipartisan.
Folker, this has been terrific. Thank you very much for sharing all of your insights. We covered a lot of ground together and look forward to seeing you real soon. Vielen Dank.
It's a pleasure, and all the best to you, and see you soon again.
Bye-bye.
Thank you.
Thank you for listening to You're in Business. If you've enjoyed the conversation, like, share, and subscribe. See you next time.